South Africa's financial services led the Johannesburg Stock Exchange lower on Wednesday as the local bourse tracked large declines in stock markets all over the world, with investors fearing a global recession arising from the brewing US and China trade war. Now, the global meltdown on stock exchanges due to the imposition of import tariffs by the US president on the US's trade partners and counter duties by China saw the JSE All Share Index lower by 2.07% to about 82,486 points just after 5 p.m. and 8.05% down over the last 4 weeks. So what rippling effect will this have on the market? This morning, we're joined by Professor Waldo Krugel, an economist at Northwest University, South Africa. Professor Krugel, thank you so much for joining us.
Good afternoon, and thanks for the opportunity to talk to you.
All right. Now, the trade war seems to be hitting hard on South Africa, but would you say that the market is overreacting?
I think it's definitely an overreaction to only the trade war. In South Africa's case, there's also the problems with the government of national unity that I think dampens future growth expectations a little bit. And combined, we saw this reaction on the JSE. Today, it's actually recovered after President Trump announced a 90-day postponement of these reciprocal tariffs. So we are up back to around 85,000 points, but that's still a fair bit below the 89,000 that we saw before the two crises hit.
Okay, so then let's look at the specifics now. Why do you think that, a financial giant like maybe Standard Bank tanked so hard? Doesn't their massive size and probably, that Africa-wide reach mean they're too exposed to global chaos?
I think that is the case. African economies tend to be quite small and vulnerable to international events, even though we don't have that much exposure to either specifically the US or to China. Just the fact that there's talk of a global recession and economic growth prospects for South Africa are being revised downwards almost weekly, that immediately influences the banks and the retailers. And it's already spilled over into mining as well. So the impact's been quite wide-ranging. I'm not sure where that money went, though. If the sell-off has been broad, as you've also said, it's been stock exchanges across the world. So I suppose investors who are staying liquid to see how things play out before they get back into either bonds or shares.
Okay, now investors worldwide are reacting to the US-China trade war and its ripple effects. But why are they dumping stocks like the JSE so fast? A couple of people would think, it will be a gradual process, that some of the investors will equally still be speculating and be cautious and be trying to understand the market before taking some drastic decisions.
I agree. That would be the more sensible way to go about it. I suppose the fact that South Africa has a relatively liquid market and exposure to an emerging market is something you leave immediately when trouble hits, and investors have been moving offshore into these so-called safe haven assets, and that leads to I think more than proportional sell-off than you would expect, calibrated to the news cycle that we saw. Our own exposure to trade with the US, the major items are agricultural and automotive. That doesn't really translate into what we see what's happened on the JSE. I think the reaction there has more to do with sentiment than with actual companies being exposed to tariffs and the implications of a trade war.
Now, let's look at the implication from the position of the coalition government. Now, the South African government faces a big challenge, and we're talking about managing domestic fallout from global trade shocks, but having to garner support from all the parties involved in the unity government. Now, how is the GNU supposed to handle this trade war fallout when they can barely agree on anything?
You're absolutely right. It's a major challenge, and I think what happened with the budget this year really demonstrates the fault lines within the GNU, that these parties are further apart than everybody had hoped, and that ideologies still play a significant role in their thinking about something like the budget. And when it comes to international relations, there are these big differences as well. And I think that's South Africa's been in the crosshairs of President Trump for the last 2-3 months. And the end result is that is basically stasis in South Africa. We've been too afraid to act. After they kicked out Ambassador Rasool, there hasn't been any sort of engagement, which leaves trade and trade policy up in the air. And that creates its own uncertainties.
And now, by a broader implication, Professor Krugel, South Africa's exports to the U.S. face tariffs too. So how bad is it going to get for the products, for the jobs, and even cash flow?
At the 10% level that he's now settled at for the meantime, I should say, at least we're not losing competitiveness to other exporters in the relevant industries. We were really worried at a 31% reciprocal tariff. That's much higher on, for example, our citrus products than our competitors in South America. Now that playing field is level, but that doesn't mean that it wouldn't have an impact on demand on the US side. If prices go up, it means the quantities demanded are fewer, and that.
Hello, Professor Krugel.
So problematic all round.
Okay. Okay. I think we lost connection with you for a few seconds there, but then let's just move on. Now, I'm looking at all these issues facing South Africa and how it's even impacting the local currency, that is the rand. I don't even know what the reaction of the SARB will be to these issues plaguing the South African economy and the rand. Do you even think that SARB might be raising rates to actually defend the rand?
I don't think they would actively defend the rand. That's a game you can't play if you're a small currency in the global economy. But it would make it easier for them to say that a weaker rand fuels inflation, and they would rather keep rates unchanged for the moment to combat or counterweigh that possibility. In our case, since we're an oil importer, the lower oil price really benefits us and will probably reduce some of that inflation risk, which will also make it easier for them to just maintain rates instead of increasing rates again. But actively defending the rand is really an impossibility.
Okay, so talking about risks associated with the South African economy and these trade tariffs and how it's affecting the currency and on all, are there other probably policies, either monetary or fiscal, that the government should be looking at to actually stem the tide?
In our case, I think the key is we need growth-enhancing reforms. And that's not necessarily linked to either spending or taxes by government. It's regulatory more often than not, making it possible for the private sector to play a role in network industries like electricity and rail transport. And in that way, try to fireproof ourselves from these international shocks. If we know that we are as efficient as we can be and as low cost as we can be, that'll make us competitive in the international economy. But those reforms, and it gets even more tricky once you start talking about a flexible labor market reforms, those sorts of things, they take time and they are contested. Not everyone in the ANC and not everyone in the GNU actually believe that these are high priorities, and there's always a bit of pullback when it comes to pushing these ahead.
And of course, we know that the JSE reflects South Africa's economic health, as some analysts would put it. But then let's look at it from the angle of the All Share Index that is down by 8.05% in 4 weeks because of Trump's trade tantrum. Are there any quick buffer fixes for it?
Unfortunately not. I think a rethink of international policy is definitely necessary, but that's not going to be quick. And the kind of reforms that we need to implement to boost economic growth locally, again, we've been busy with them for such a long time, but the results are still down the pipeline. So in the short run, we are subject to this volatility. And I think hopefully consumer resilience will shore up some of that fall in the JSE, but that puts a lot of pressure on the domestic consumer to try and save the economy.
How do you expect consumer resilience to actually probably serve as a buffer or saver in the equities markets where you have foreigners that actually hold over a third of the markets?
I think the prospects for consumer-facing industries are not bad this year. We saw increase in retail sales in January. That's quite unseasonal. Consumer confidence has been relatively up, slightly down recently, but positive. Things like new vehicle sales have shown that consumers are in a position to increase spending a little bit. I think the low inflation rate has played a role in protecting the purchasing power of their salaries. And so in that sense, that's not bad news for the food producers, the retail sectors, the banks. They should benefit from that, independent of what's happening in the international economy. Of course, if those reciprocal tariffs return, all bets are off and things could look a lot different.
All right, to wrap things up, Professor Krugel, now in all that we've said today, SARB is saying that banks are well capitalized. But I'm wondering if that even actually matters when we've seen shares plummet.
I think it matters in the sense that they would be able to cover their liabilities if some form of a financial crisis is the next round of turmoil. There are some US indicators that show strain in the financial sector, but I think South African banks are well capitalized and well governed as well. So I think financial problems emanating from trade problems is not an issue that we're worried about yet.
Well, I guess one shining light is the gold market set to be spiking by around $3,000 per ounce. But then we hope that other markets will be able to rally around to make the bourse and, of course, the South African economy more robust and healthy at this particular time. Professor Waldo Krugel, economist at Northwest University, South Africa, thank you so much for your time on the show. It was nice talking to you.